Think about the certainty and the predictability, and then also think about how this positions you and puts you in a position of strength where you can capitalize on opportunities rather than a position of weakness.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
How's it going, everyone? And welcome to today's show on Wealth Strategy Secrets. Today, we are joined by MC Laubscher. MC is an entrepreneur, investor, and best-selling author committed to transforming the financial landscape for business owners through cutting-edge wealth strategies. As the founder of Producers Wealth, he elevates financial health across the U.S., and his educational platform, Cashflow Ninja, has impacted over 7 million people worldwide. MC offers expert guidance on achieving financial independence and building a lasting legacy. And in today's show, we discuss MC's latest book, Get Wealthy for Sure. At the end, MC also provides a special gift for listeners, so make sure you listen to the end. And without further ado, MC, welcome to the show.
Dave, great to see you. I've been looking forward to our conversation.
Yeah, always awesome to have you on the show. Really looking forward to this and excited to dive into your new book and unpack this book. I've got a copy with me right here. If you're on YouTube, you can check this out. It's called Get Wealthy for Sure. So looking forward to that. But, you've been a guest multiple times on the show in previous sessions. But for those who aren't familiar with you, can you give us a brief background on your journey?
Yeah, so I'm originally from South Africa. So I came to the United States in 2001. So I've been here for a while, just playing sports and, obviously landing in the United States. I saw the opportunities that are available here, and there's no limit on upward mobility. It just blew me away. I just felt like I hit the lottery, right? Which I don't think any people that are born in the United States know that they hit a lottery by just being born here, of the opportunities that's available. So I played sports here, and during my journey of playing sports, I studied, I learned, I read books, came across Rich Dad, Poor Dad, and I had I swallowed the purple pill, hook, line, and sinker right there. And I started to invest some of the money that I generated while playing sports and working at that time in real estate. So I took action. I bought my first investment in actually 2001, towards the end of 2001, single family real estate. And that's when the journey started. The big light bulb moment there was, I had acquired the property, put tenants in there, got a contract in, rented it out. I collected the rent, paid all the bills associated with it, and there was cash flow left at the end of the month. And I looked at that and I said, wow, just like in the book, Rich Dad, Poor Dad. How many times can I do this over and over? How many of these properties can I acquire? And since then, obviously my journey has grown, but involved in many different asset classes, different forms of commercial real estate, energy, insurance, assets, and have invested in many different businesses. In 2015, I started my firm, Producers Wealth, which focuses on advanced life insurance strategies for business owners and investors. And we serve clients in all 50 states. So we do a lot of advanced strategies with regards to how to position capital, how to protect your number one asset, which is yourself and your family, and also your business, and then also doing some estate planning and legacy planning. And then in 2016, I started a podcast called Cashflow Ninja. And it was a passion project at that stage that I just wanted to learn more about all the different ways that people are generating income. I found it fascinating because there's so many ways of how to do it. That show, I never thought it would grow into what it's grown into, but we've been downloaded over 7 million times in over 180 countries globally, and it's now a podcast. We have books, we have webinars, reports, and it's grown into a financial education platform. So I've had a lot of fun doing that, meeting incredible people. And I've, like I said, I've been an investor now for over 20 years. I continue to enjoy that game too. So I love the game of business and investing. And through my businesses, I love to serve business owners and investors.
Yeah, it's such an interesting journey. And I can imagine the perspective, right, coming from South Africa into this country. And so many times I think we often take it for granted, right, the liberties that we have. And a lot of this is, it's not only about financial freedom, right, but it's, creating freedom of purpose, freedom of time in our lives, freedom of relationships, like who do you want to actually work with, and all these things. And, there's definitely plenty of faults in this country, but there's also just massive opportunities for those, who can seize it. And I really appreciate your mission, MC, right? Because it's all about really trying to serve others and provide this education that, frankly, it's just not taught anywhere else. We go through all these educational systems in the country, but, this is do it yourself. You have to actually figure it out. But not only are you teaching, but you have a lot of experience in actually implementing it, investing yourself and doing all that. So really appreciate that. And one of the things that really struck me about your new book here that I really like the title, right? It's called Get Wealthy for Sure. And one of the things I've realized as an investor is that, investing comes with risk. And we all want our investments to be a home run. But the sooner you can grapple the fact that there's risk around investing, and no matter what that type of investment is. So, I've shared this story with many before, but like we actually, my wife had been gifted Kodak stock, a big portion from her dad, which was really sentimental. It meant a lot. And, the company just overnight imploded, right? And it was supposed to be this safe blue chip stock, literally went to zero, absolutely no recourse, right? We've also seen this past year, people actually even investing in banks and losing money in banks, right? So I love this topic of get wealthy for sure, right? Because you're actually if you believe that you have a degree of certainty in your overall portfolio, this is about kind of creating certainty. So how can I get wealthy for sure? So really excited to unpack this. And maybe why don't we start with this, MC, and why don't we just talk about what is the problem? Where do you see that the biggest financial challenges really lie for entrepreneurs and maybe the biggest mistakes that they're making today?
Yeah, so you've made so many great points there. I would say the first thing that people have to understand, and I have shared this many times, but I'll continue to share this message loudly and proudly, is that there are 4 distinctions that need to be made where capital can be allocated. The first one is savings. And the definition of savings is when you put your capital into a vehicle with not that much risk. I won't say that there's no environment where that's completely risk-free, right? So you don't have a lot of risk in a savings vehicle. And therefore, because of the limited risk that you're taking on, you get a very conservative return on savings. And the goal, obviously, is for capital preservation, not to lose any of the money that's in there. And because of that trade, you're getting a very conservative return on that. The second piece is investing. Now, investing is when you allocate capital into a vehicle and you're taking on a lot more risk because in that trade, you're taking on that risk in the hopes of a much higher return. So this can be done strategically, and obviously you have to educate yourself. You have to be knowledgeable, know what you invest in, and of course, know the strategy. But that's what investing is. So you can lose some or all of your capital. And then there is speculation, which can be an art form. There's really good speculators out there. And that's when you look at distortions in the marketplace or trends that are coming, and you position capital and you make a profit from that speculation. Again, you could lose some or all of it. And of course, the risk is much, much higher than investing. And therefore, you're hoping for a much bigger return, even than the investments. And then there's gambling. Now, gambling, as most people understand, is placing bets. Now, can you win in gambling? Absolutely. But if you look at the math, the overall math of gambling, you're going to lose more than what you win, even if you make calculated bets. And I'm sure people are listening to this conversation and saying, hey, I know a card counter, somebody that does really well in gambling. And by the way, I know one too. He was in one of the masterminds that I was a part of. But even those folks, mathematically, the game is rigged against you. So you're going to lose more than what you win. That's why when you do hit a jackpot in a casino, by the way, there's 20 people rushing towards you, offering you free rooms and steak dinners and so forth. Because over the long term, you lose. They know that. That's how the game is worked out. So those four distinctions is very, very, very important. So this marketing that's out there in the financial space, I cringe when I hear stuff saying I'm saving for retirement in a 401k. I just absolutely cringe because it doesn't even make any sense. The definitions it doesn't even match up. At that stage, they should be saying that you're investing. And I would argue that a case can be made that you're probably leaning towards gambling if you don't know anything about what you're invested in. There's no strategy involved. There's no exit strategy and so forth. So that's the big thing is people have to understand those distinctions. Now, one of the biggest mistakes that I see, and in the book I share business owners, which investors are business owners too. Your business is your investment portfolio, even as a limited partner. But one of the biggest mistakes that I see business owners do is when they start a business and they're in a startup phase, they're grinding. It's hours that you put in there, a lot of sweat and tears and time. And at that stage too, for the most part, when people start up in business, you're all in. So you don't really look really good at a financial statement. You actually look almost broke, right? Because everything is invested in the business. And then the business starts to take off and grow. And all of a sudden it's profitable. And now you're growing and scaling. And while not a single financial professional would have taken the time to speak with you in the startup phase, they're now banging down your door to sit down and have a conversation. And what usually happens at that point in time is financial professionals sit down with the business owner and say, Mr. or Mrs. Business Owner, you're doing a fantastic job. You've grown this business significantly. Let's diversify some capital outside of your business for you. And what they then do is then take the capital from the business owner and put it in stocks, bonds, and mutual funds, very well diversified portfolio. Well, at that stage, the business owner has taken capital from their business and provided liquidity to other people's businesses and investing in other people's businesses. So, I mean, it's never made sense to me. So the person that needs the capital the most, the business owner at that point, is now investing in someone else's business and providing liquidity where your business should be needing that. You should be providing liquidity for your business. And if you're an investor listening to this, you should be providing liquidity for your investment portfolio. With, even as a limited partner, I look at my investment portfolio that I'm a limited partner in a ton of investments as a business. And I always need to have some liquidity on hand to grow that investment portfolio. So I think that's one of the biggest mistakes that I see out there currently is they don't know the definitions. Most people don't because we're marketed to that way to confuse everybody. So I think that's what's going on. And then also understanding of who needs liquidity more. If you're very focused and you have a goal that you're looking to accomplish and achieve, well, how do you align your assets, which is your capital, to continue towards that journey, towards your goal and what you're looking to accomplish? So I would say those are some of the challenges that comes to mind in this environment too for business owners and investors.
Yeah, that's such a unique way to look at it. And I really just want to rewind that for listeners and make sure you really caught the grasp of what MC is saying there. So if you're a business owner that is scaling your business, or let's say you've actually exited your business, and all of these, financial planners in Wall Street are going to have you invest in, some kind of financial services products, right? You are now taking capital off your board and putting it into some public company. And, why does Tim Cook need more capital to scale his business? When you could actually probably take your capital inside of your business and at least get 10, 20, 30x return on that, right? So why not keep that capital, keep doing what you're doing? Or as you said, having an investment portfolio is also the business. So providing liquidity to that to continue to scale your passive income. Right. So it's really a unique way to look at it. So thanks for that insight.
Yeah. And when you're a business owner, you have startup, you have your growth phase, and then you've got a managing company phase, and then you have a self-multiplying company phase. So that business is going to need capital and access to capital. So, if you're a business owner, do you want to be beholden to financial institutions and go to banks all the time? Most people go there during a startup phase. And then because of how cash flow is managed and where capital is positioned, they continually need lines of credit from a financial institution at that point to continue to grow and scale and finance the growth and scale of the business. So I look at that and say, how do we do this a little bit differently? How do we put ourselves in control over this, position our capital where we become our own bank, and we finance the growth and expansion of our business? And I just want to hit on that point that you just made too, Dave. I appreciate you sharing Tim Cook with Apple. I kind of jokingly look at this. I love Apple products. I have an Apple MacBook. I have an Apple iPhone. But Tim Cook doesn't need more of my money to scale his business. My own business and my own investment portfolio needs my capital to grow and scale.
Yeah. So where do you think is the best place for people to position their capital?
Yeah, when you have options, and there are options available for folks to, so let's explore some of them. So banks is the first obvious choice that people will explore, right? They will look at, all right, well, do I just put it in the bank? Well, of course, banks these days are not very, very secure and solid. And as a matter of fact, most of them are practically insolvent by their own financial statements. If you take a look at it, there's a lot of maneuvering going on there. So we've also seen, about approximately, I think I lost track, 7 banks fail in the past 12 to 18 months. We've had a lot of banks being downgraded by rating agencies. We've also had several banks being put on watch lists. The phrase or the saying "money in the bank" has not aged that well. So the second option then is bonds. Well, if I don't position large sums of capital in banks, we might be able to do it in bonds. Well, the reason banks were in trouble was because of the bonds. You had a massive interest rate spike, and a lot of banks position capital in bonds. So you have an interest rate risk, and you also have a massive counterparty risk at this stage, because as everybody listening to this is aware, that most governments, whether it be federal, whether it be state, provincial, local, they're insolvent. So you're hoping that an institution is going to make good on promises that is insolvent. So that's another option. And then you look at, from a efficiency standpoint too, one of the biggest threats, which everybody is aware of listening to this, and Tom Wheelwright does such a good job of explaining this. Your biggest threat is taxes. It's a business owner investor. So that has to factor in where you position capital to protect it from taxes, because we really have, I call it a gray rhino storming at us as far as from a tax standpoint. People talk about black swans, which is an event that you don't see coming, a gray rhino being from South Africa, I look at it as an event that you can hear it coming, you could feel it coming, and you could see it coming. And when the rhino is storming at you, you know it's coming. So the tax challenges that are coming is a gray rhino. So that has to factor in where you position it, and then that brings in qualified plans, which people look at. Lose complete control of your capital, and you're deferring taxes, which is the worst strategy currently, right now, tax strategy. To defer taxes, 10, 15, 20, 30 years down the line, could be financial suicide. So you look at other tax efficient options, and that brings you to life insurance. And if you look at the asset class of life insurance, which that is how it's looked at by the ultra wealthy and in family offices, this is a place that they covet to position and warehouse large amounts of cash. So we have some banks putting their money in there. A majority of banks still put capital in life insurance. We have corporations. We have family offices, as I mentioned. And then we have the ultra wealthy and even political elite. Here's a fun fact. It's a little bit off topic, but the sitting president of the United States had to file a financial disclosure, and he has 6 life insurance policies with a mutual life insurance carrier where he warehouses his family's capital. It's where he warehouses and stores his capital. So President Joe Biden has 6 of them. And we found that out because he had to file financial disclosures. So this is a place where the ultra wealthy and position capital, and they look at it as an asset class, because as an asset class, it's doing something in an overall portfolio. People have a different take on insurance. Most people don't like insurance. I don't frankly like a lot of insurance either, because if you think about it, a lot of the times when, let's just take a property and casualty auto insurance, you pay the premiums, and when you need it, when there's an accident and so forth, you file the claim, and what happens? Your insurance costs go up. So it naturally has a bad taste in the mouth of a lot of people. But if you look at it as an asset class, how the ultra wealthy look at it, this is a place where you have a ton of guarantees. You have predictability, you have certainty, and you also have clarity. This is the asset class in a portfolio inside of family offices and with the ultra wealthy that makes all of the other asset classes that you're invested in better, because this is a volatility buffer. This is the one thing that is a rock solid foundation that's not going to shake or move if there's any turbulence in the economy and the markets. So that's where a lot of folks, position capital, and that's where we position capital. And what I share in the book, Get Wealthy for Sure, is you can position your capital in an asset class, a very, very specifically structured dividend-paying whole life insurance policy with a mutual life insurance carrier that's structured specifically for early high cash value, because it has the guarantees of the premiums that you're putting in there, your capital, which most of the premium goes towards your savings, your cash value. So that's guaranteed. It's guaranteed never to go down. It's contractually guaranteed to grow. Just step up every single year. You also get to participate in dividends from mutual life insurance carriers. It's not guaranteed, but some of them have paid dividends, one carrier, since 1847, every single year, consecutively. So you've got a track record of a rock solid financial institution, mutual life insurance carriers, which are completely out, they're not listed on the stock exchanges like stock insurance carriers. They're operated for their shareholders, which are their policyholders, which stock insurance carriers, they operate for their shareholders, which is the buyers of the stock, right? So BlackRock, Vanguard, State Street, those guys. And so you've got all these guarantees. You've got the guarantee to the growth, and then it's tax-free growth.
Hey, it's Dave Wolcott here. Let me ask you something. Are you tired of the same old financial advice that leaves you spinning your wheels? If you're ready to discover the real secrets the ultra wealthy use to build unstoppable wealth, then I've got something just for you. My new book, The Holistic Wealth Strategy, is your ticket to learning the proven strategies that the top 1% don't want you to know. This book isn't just about money. It's about building a life of purpose, freedom, and lasting impact. and I want to give you a free copy. Visit holisticwealthstrategy.com and get yours today. It's time to level up your financial game and create the future you deserve.
So it grows tax-free in this vehicle, and then you can access it tax-free through setting up a line of credit and policy loans. You can also add riders to the contract, like a disability rider, which means if something happens to you as the business owner, then you don't lose the policy, and the insurance company pays the policy. And of course, you have a death benefit associated because it's a life insurance policy. So that is another big factor that goes tax-free to your beneficiary. So we always ask business owners and even investors, because again, an investor is a business owner. Your business is your investments. What would happen to you and your family if you either pass away or become disabled? And if you're a business owner with partners, what happens if one of the partners passes away and become disabled? What does a contingency plan look like for the family and for the business? So this is why it's positioned in there. That's a rock solid asset class that's been around for, in the United States since the mid 1800s, that provides this predictability, this certainty, and that provides clarity for you, the business owner. And that's why I called, named the book too, Get Wealthy for Sure. Because this is the one strategy, personally, I've been doing this for almost 2 decades, that I can always count on, that I know that it's never going to go down in value. It's going to increase nice and easy. It takes a lot of discipline. It's not get rich quick. It's not exotic, but you can get wealthy for sure, having an asset class like that and positioning your capital and warehousing your capital in your portfolio.
Yeah. So you talk about life insurance being an asset class, and I think a lot of people haven't really thought about it in that manner. And we talk a lot on our show about asset allocation and, what is the appropriate way to do it. We're studying from family offices and centimillionaires. How would you really describe, your asset allocation investment thesis utilizing life insurance?
Yeah. So if you look at the overall asset allocation, I look at, from a portfolio standpoint, that's where cash is warehoused. So people always ask me, do you still use banks? I still have bank accounts. I am just not beholden to any financing that comes from a bank. I have positioned my capital and cash in this life insurance outside of the banking system and outside of Wall Street. So that's one portion of allocation. And then there is an allocation that I call wealth insurance. And that's where some precious metals come into play. And that I look at that as wealth insurance. So we've got cash, we've got precious metals, and then I have a cash flow portfolio, which there's different allocations inside of that cash flow portfolio, be it real estate, be it energy, and so forth. And then there's a growth portfolio, which you can invest in. This is much more longer term investments, and we're really looking to grow capital. So for example, life settlements is an asset class where you can contractually grow capital over 5 to 10 year periods that might factor into that. So there's 4 areas that I look at. So when it comes to life insurance, that is the asset. So the asset of cash, how I can position that as efficiently as possible is where the majority of cash is positioned. We always talk about what's assets and capital, right? Because people just think of financial assets and capital. Another thing that this asset class is if you're trying to create a legacy for yourself and your family. Well, those are the biggest assets of the family. It's you and your family. So that asset class not only provides all this predictability and certainty inside of a financial portfolio, but the family itself is protected, and every family member can be protected, right? So with that asset class. So it does multiple things simultaneously. So when you're also looking at balancing portfolios, yeah, you can take some more, let's just say a policy loan from your banking system, which I call these life insurance contracts put together, your family banking system, and then you can deploy it into other assets. So your money is doing multiple things simultaneously. You're still getting the growth in that system, in those contracts, in those policies, while you're leveraging the capital and investing in other places. Banks know life insurance are assets. They put them on their statements as assets. When you take a life insurance policy to the bank with cash value, one of these policies that we designed, the infinite banking policies, they look at it as an asset. And there's actually certain financial institutions that have come up with products that are called LILOCs, life insurance line of credits, where you place an asset as collateral at the bank. So they know it's an asset. The families of the ultra wealthy knows it's an asset, and it's an asset that does multiple things simultaneously. And that's why I call it the asset clause that makes everything else in your portfolio better.
Yeah, it's interesting. We've had a lot of conversations in our mastermind group about actually creating what we call a purpose-based portfolio, right? And so you're looking at, what types of classifications do you want around your assets? So for instance, you have growth, right? That you're looking for growth, and it could be long-term, right? Down the road. You've got cash flow, right? But also, as you pointed out, right, this is the place where you can carve out this capital allocation of certainty in your portfolio. And do you need certainty for you and your family to live? Let's say it's 12 months of runway. If you're out of work or your business isn't, producing for 12 months, whatever that might be, right? Or to handle, let's say, a medical expense that completely came out of the blue, right? You want to be able to be prepared for that, right? And not have to sell, let's say, other assets to be able to cover that, right? So that's really a good place for that, that I've seen. And also, I like this concept as well around adding velocity to your portfolio. So, I've been, leveraging these infinite banking policies myself for over a decade. And basically we take, it's this process of taking the cash flow from our cash flowing assets, dumping it right into the policy so it can immediately start to work for you, right? And then we can build up enough capital till we get to the next tranche to either set up a new policy or go and buy that next asset, right? So it is a great place to really store capital.
Yeah, it really, if you look back, and I just, look back fondly over the past, 2 decades of having implemented this strategy, and I get I get asked plenty of times of what is the one thing that you've done over the past 2 decades that have made all the difference in your overall wealth strategy. And it was because this was the foundational piece of it. So it's something that I know it's there. I know it's going to be there. And I know I can access it. And to your point, when you set up these policies, you build up the cash value. Let's just say you take a policy loan and you invest in another asset class, or you reinvest it in your business. Yeah, it just becomes a cash flow management cycle, because now the capital that is generated from investments and the new capital from the business can just be used to pay down this line again, and it becomes available, and you do it over and over. And that's why it's called infinite banking. And this is all while the cash value is placed as collateral. I just wanted to stress that point, which means it's never drawn down. So you get uninterrupted compounding in your policy. So as if you've never drawn it down, where if you compare it to a savings account in a bank, you would just, put money in a savings account, you would take it out, go and invest in an asset, and now you have to build it up back again. Where in this policy, the reason why the ultra wealthy really, really likes the strategy is because you get the uninterrupted compounding, and it's tax free. That's another thing. And I have to include that in how I explain this these days, because I think the tax-free uninterrupted compounding is going to be huge in the next 5 to 10 to 15 to 20 years.
Yeah, I'd really like to just drill down into something you said there, which is really the multiplier effect on this. And I think people often do not look at the entire gravity, right, of a certain investment vehicle or asset class and what it's trying to do, right? But when we call it really strategy stacking, right, with our wealth strategy. So you named so many different benefits, right, that this can provide. It can provide, tax-free growth. You have a death benefit associated to it. You can use it as collateral. It's got asset protection on it. You can do legacy planning with it, right? I mean, you just went on, right, with all of the different things. So when I start to look at and I create value for all of those different things, what does it mean to you to know, for your family to know that you have a death benefit protection if anything were to happen to you? What is the value of that? And quantifiably tag a value to that. Next, quantifiably tag a value to uninterrupted tax-free growth that you have certainty over. What is that worth to you, right? What is it worth to you to know that you can create a reverse income stream and retirement, right, that's tax-free to actually create this income stream, right, which is what we're working about all the time. So I would encourage people, like the lens in which to look at this is take that multiplier effect and really try to quantify it to figure out the total value of it.
The predictability of this in today's environment, is incredible. I mean, I would ask people to think about what is it worth to you and your family to have this type of predictability in one of the most unpredictable global environments and national environments that certainly people of our age have lived through, right? So if you look at many of the different asset classes right now that are out there, there's a lot of unpredictability and there's a lot of things happening. And of course, interest rates have impacted a lot of investment classes. So where does the predictability come into your portfolio? And this is something that, like I said, is one thing that you can count on in very, very unpredictable times. I'll share a story quickly with you about unpredictability. So in March of 2020, you want to talk about unpredictable. March of 2020, the world was rocked and shocked, right? And as the economy was closing down and shutting down and so forth, and people were just going to their homes, no longer going in. When you were a business owner during that stage, and I always say to people, we've almost collectively blocked out about 48 to 72 hours because there was a time period before any of the PPP loans, before any of the bailouts, before any of those things. How did people feel at that stage when there was no certainty of anything during those hours before, the government stepped in and offered these loans and bailouts and all those things? And at that stage, personally, what happened is we got a lot of phone calls from folks asking, well, what's going on with the life insurance policies? And it was incredible because it was there. There was no change to it. Markets, remember, during that stage crashed, depending on your portfolio allocation, but 40 to 50%. Just Wall Street portfolios, right? We had oil that went negative during those days. So you had all these things going on. What was the one thing that you can count on? And at that stage, for myself and my family and for, everybody in our networks and for clients, that was the one thing that was there. That was unchanged at all. We had certainty during that time saying, we have this set up. It's there. So, and not only was it there and we could access it at any given point in time, we could utilize and leverage it inside of our network at that stage to capitalize on opportunities, which there were plenty of in the next, 6 to 12 months. So think about the certainty and the predictability, and then also think about how this positions you and puts you in a position of strength, where you can capitalize on opportunities rather than a position of weakness where you then have to kind of like, reconfigure what you're about to do or just protect what you have, right?
Yeah. Yeah, really good insights there, and appreciate that, MC. If you could give our listeners just one piece of advice about how they could accelerate their own wealth trajectory, what would it be?
Yeah, I think I mentioned it a little bit earlier in our conversation. The one thing that have really, really moved the needle in the trajectory of my own wealth, and what I've seen really, really has elevated other people that we work with and clients. It is the strategy. It is the strategy of adding this specifically designed life insurance to your portfolio, and what this does to other pieces of your portfolio is something that is really going to help the trajectory of your wealth. So that's the one thing that I can share is once you start adding this, all of a sudden there's more clarity, there's certainty, there's more predictability, which leads to confidence. So having these things put in place, the confidence that this provides, that you're always going to have access to capital when you need it most. If something bad happens, which unfortunately, that's life. Bad things happen to great people all the time. If something happens, then there's something in place as far as from a contingency planning standpoint for your family and your business. So this would be if I can share the one thing and one piece of advice for folks is, this is what it's done for me, and I know this is what it can do for other people too.
Yeah, awesome. Well, thanks so much for demystifying this topic. I know it can be very complex for people. It kind of takes a little while to get your head around, what this actually means, but I think you described it right in a way that's very practical, and people can also just think about it in a different way and how that could, really help them out, regardless of their position, if they're an investor or an entrepreneur. So if you'd like to get a copy of MC's book, Get Wealthy for Sure, or connect with MC, what do you think is the best place for people to reach out?
GetWealthyForSure.com. GetWealthyForSure.com. And I just wanted to also share, I'm really, really excited. Get Wealthy for Sure was #1 on Amazon in several categories over the past week. So it's been really exciting to see that this message is getting traction. So if they want to get a free copy paperback, only pay shipping and handling, they could go to GetWealthyForSure.com.
Awesome. Really appreciate that, MC. Thanks again for coming on the show.
Thank you so much for having me.
Yeah. Cheers.
Thanks for listening to this episode of Wealth Strategy Secrets. If you'd like to get a free copy of the book, go to holisticwealthstrategy.com. That's holisticwealthstrategy.com. If you'd like to learn more about upcoming opportunities at Pantheon, please visit pantheoninvest.com. That's pantheoninvest.com.